Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello everyone, welcome to an all-new episode of the Smart Property Investment Show. Unfortunately, Phil Tarrant is not here today. It's Grace Ormsby with you. As always, though, we're going to make sure that we're talking with an investor and giving you guys the content that you really want to hear. So while we are still social distancing and conducting most of our episodes remotely via Zoom, we aren't actually located all that far away from today's show guests. Today, I'm really excited to welcome Rizul Makkar to the show. Rizul, welcome.
Thanks, Grace. Good to be here.
And you are located just down the road in North Sydney, is that correct?
Yeah, that's right. I'm a couple of blocks away. You know, there's one of my friends, Michael Johnson, an old friend. I reached out to him and I've grown up with him, played a lot of hockey back in the day. So, yeah. Well,
hopefully shout out to MJ if you're listening. Thanks for getting Rizul on the show. If there's anyone else who is sitting at home listening going, I think I probably could be part of this as well, reach out, let us know, because we're always wanting to see new faces and hear new voices and stories on the Smart Property Investment Show, because that's what it's all about. No one's investment journey is the same, so we can't expect to be giving you the same content every week and it actually resonating. So Rizul, thanks so much for taking the time. And before we do kick things off, tell us a little bit about yourself and how you got into property investing.
Yeah, sure. So I started working when I was 18 in a full-time role in the finance industry. And so if we scroll back to sort of 2014, property was in Sydney was really picking up. It was boom times. So my first property foray was trying to buy an off-the-plan apartment in Blacktown. And unfortunately, I got outbid every single time. The boom times were crazy. So I missed out on a few properties and then sort of thought to myself, wow, this boom time is probably not the right time to be buying if I'm getting bid up on, you know, $500,000 apartments in Blacktown. So very happy to miss out on those first properties given what's happened since then. So that was my sort of first foray into property.
Yeah, and just thinking back, so that's what, 6-7 years ago. $500,000 still would have been a lot of money for a property in Blacktown if you didn't even really know what you were buying into, if it was off the plan.
Yeah, that's right. And with the off the plan, you know, the logic was always, you know, it's only 5% down now. So $25,000 I'd sort of saved up and then, you know, wait a couple of years until completion and then get the benefits of capital growth that didn't actually come in the end. So,
and not many people do start full-time work at 18, especially in Sydney and in the finance industry. I'm sort of thinking a lot of people do go to university first. What was your goal? You know, were you always working towards that property goal as a young worker? Because even then, people that are working full-time, it's not really high on the list of priorities.
Yeah, sure. So I was actually still enrolled in university. So I was studying commerce, and given the low amount of hours in university for commerce, I was able to balance full-time work with that as well. But on the property front, you know, everyone in the boom times, especially parents growing up, was saying, you know, get into property quickly. Property never goes down. You're always going to make money. So that's where the sort of thought process came in early on.
And so you didn't get any of the properties in Blacktown. What ended up being that first purchase?
No, that's right. So then a few years went by, so I didn't quite buy any properties then, and Sydney was booming, and I never really thought about buying property other than that. So I was like, hang on, maybe I'll just wait until property sort of comes down again, which never really happened. So the first purchase I made was in 2018. So only a couple of years ago, I bought a property in Woodridge. You know, after sort of doing a lot of research and listening to and being influenced by the Smart Property Investment Show, purchased a property there.
So that's 4 years after you first started looking, really. I'm imagining by then you'd worked up a little bit more of a deposit, down payment on that.
Yeah, that's right. And by this time, I'd been working full-time for 4 years. So I'd saved up enough for the 20% deposit and the 5% stamp duty. So I had the full deposit this time for the first property.
And what was that property? You know, what did it set you back? What did it look like? Give us some of the specifications.
Yeah, so that was a property in Woodridge. So it was a 3-bedroom high-set house. So I bought that for around $260,000 and it was getting about $340 a week in rent. And that property sort of needed a bit of work. So a lot of the paint was flaking. So there was a little bit of upfront money that I spent just to sort of fix it up and get it into rental condition.
That is a pretty good purchase price considering then what you are able to get on rental repayments.
Yeah, that's right. So I was pretty happy with the purchase now. There hasn't been too much growth in Woodridge, but I was able to get it revalued up pretty quickly. And the bank sort of revalued it up by, another $50,000 within a year. So I was able to get a lot of the money back out, which sort of led to the next purchase and helped that journey along.
You might need to help me a little bit here. I think I am a little bit naive, but give us a little bit of background and where exactly is Woodridge? I'm embarrassed to even ask that, but I need to do it.
Yeah,
I don't know where it is.
So Woodridge is, probably a bit on the infamous side of Brisbane. It's about 20 kilometres south of Brisbane and into the Shire called Logan. And a lot of the history of Woodridge revolves around housing housing. And so, a lot of properties there are run down, they need a bit more work, and it's a sort of higher crime area. But in saying that, that doesn't necessarily mean you're not going to get returns from, not so good areas. Yeah.
And that Logan area is expanding. We are seeing on Smart Property Investment that a lot of people are flocking there. They are putting in the infrastructure and things like that. So it sounds like it was a very wise investment decision. Why did you go north of the border? Especially now, it's easy to say with hindsight, but, we do have hard border closures sometimes. Hopefully not again. But what got you into looking at interstate and why was it a good idea?
Yeah, sure. So I think interstate sort of came about from, again, the Smart Property Investment Show encouraging me to say, hey, I don't really need to just think about my own backyard. I don't need to buy somewhere where I grew up. And so if I can find better value and potentially better returns elsewhere, I should definitely be open to that. And I thought Brisbane coming up, circa 10 years of no growth or relatively low growth, and the economy being quite diversified and, the population growth not just coming from migrants, it's actually a lot of like interstate movement. I thought, for the next few years, Brisbane is sort of ripe to grow in terms of population, but in terms of where the economic drivers were also sitting, Brisbane was sort of hitting the bottom and things were looking quite positive post that sort of mining boom that hit in 2012.
And we do love that you are shouting out the Smart Property Investment Show. It sounds like you've been a listener for a few years now, but we're sure we're not the only source that you've reached out to help you along this investment journey. Who are some of the other people that you leaned on or looked towards for a little bit of advice?
Yeah, that's a good question. I think, sort of before I bought my first real purchase, I ended up doing a lot of research into, several different property blogs. There's a few podcasts available. I think Property Couch is another one. So just really hitting the education piece and sort of working out what's going to just drive the investment growth. And I think, that sort of helped me save a lot of the costly mistakes I could have made by just sort of learning from other people and what actually happens in property markets over time. So, I was researching pretty much anything I can get my hands off.
And 4 years between when you sort of were first looking and then eventually buying, that's plenty of time to actually be doing your research. I think it's safe to say that you didn't go in blindly or rush the decision.
Yeah, that's right. And, I sort of took the view that markets wouldn't move that much. So, coming in early didn't make a difference and just waiting and holding on didn't really make a difference. But it made sure that the investment that I chose, because, after all, you're paying $250,000 was the right decision.
We're going to take a quick break there, Rizul, but straight after that, I want to hear a little bit more about what your actual strategy is behind your investment property journey. We'll be back soon.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Hey everyone, welcome back to this episode of the Smart Property Investment Show, where I'm joined by North Sydney local Rizul Makkar, who does work in the finance industry, and he's just been sharing all about how he started his property investment journey. And by the sounds of it, Rizul, it's safe to say you've gone a long way since 2018 and buying your first property that was worth, what was it, $270,000 at the time?
Yeah, that's right. I think there's been quite a lot of change and a lot that I learned from the very first one.
So, what is your strategy behind your investment process and your portfolio?
Yeah, sure. So after all that education that I did early on, I sort of realized there's a few levers that sort of help make, your investment quite sound. And, the first one was really, buy a house. And it all sort of comes down to land value. There's a really good book called The Power in the Land, which I read and sort of realized that a lot of the property, price growth that you get and the capital growth that you get comes from owning land. And so, I sort of focused on buying houses, buying the established houses. If you drive a car out of the lot, you typically lose about 20 to 30% as soon as you drive the Merc outside of the dealership. So I sort of thought if I buy older established houses, some of the brick basic houses that don't really have any of the facilities, nothing really breaks down, they're there to last 100 years, it was another sort of focus of mine. And then the sort of third pillar was really just making sure I can time some of the state cycles. So, every sort of city, if you look back over the last 50 years, Adelaide housing, Sydney housing, they've all sort of grown roughly the same, but the cycles are completely different. And so, Sydney and Melbourne were having their boom now. Perth, Adelaide, Brisbane, they hadn't really grown for a decade. So, I thought I'm really getting good yields on it, so I'm getting good cash flow, but then also there's a lot more potential for capital growth because they're just more affordable housing.
As I've already said, you've done so much research. How much time would you say that you dedicate to, looking up what property cycles each state is in? Because it sounds like, and it's great that you're not pigeonholing yourself in the Sydney market, but it can't be easy to be looking everywhere else at the same time.
Yeah, I think that's right. I spent a lot of time up front. I wouldn't lie about that. But now that the education sort of, you're always educating yourself, but a lot of the upfront work was already done. And now it's just a matter of sort of doing a bit of screening and just reading, macroeconomic news to sort of work out where everything lies. But, on an ongoing basis, it's pretty limited. It's quite easy to work out where some of the states are sitting at the moment relative to the others.
And so then going back to that 2018, first purchase, what have you done since then?
Yeah, sure. So it was actually quite interesting because after the first purchase, within 6 months, I sort of got, this windfall of cash out, and the deposit that I first gave to buy the first property, it just sort of came back, and I'm also saving on the side. So, from there, I sort of realized that getting cash out and getting that quick equity uplift is the real strategy to build a scalable portfolio. So I started targeting properties that I think would be able to get revalued very quickly for a materially high amount. So I was, targeting 20% growth, effectively trying to get my deposit back on properties. So since then, I ended up buying another 6.
Another 6?
Yeah, it went quite quickly. But, again, as a young person, I don't really have that much savings. So I was sort of relying on the banks being able to revalue these properties out. Yeah.
Are you renting at the moment, Rizul?
Yeah, I'm doing the rent vesting. So, in Sydney, I'm enjoying living in an apartment which is, circa 3% yield. And meanwhile, I'm getting sort of the 7 mark elsewhere. So I'm enjoying half the cost of living than the other cities.
Yeah, at Smart Property Investment, we do love a good rent-vestor story. And with 7 properties behind you, that's a pretty good example to be giving to all our listeners about where rent vesting can actually take you. So what are some of those other properties that you have bought? Because I'm just trying to calculate. So 6 properties since 2018, that's 2 a year. That's not bad going.
Yeah, so since then I've sort of purchased, all over in a couple of states. I'm partly trying to avoid the land tax threshold. So ended up buying another house in Adelaide, which was another 4-bedroom brick house, very standard basic house, had one in Perth, and then a couple more in Brisbane as well, and in Cairns.
Have you seen all these properties?
I've actually not seen most of these properties before. So, quite often I'm buying sight unseen. And, if I sort of told my parents that, that would scare the living hell out of them.
So they don't know.
They don't know. I haven't seen these properties, but
So Smart Property Investment has heard it first. That
they have heard it first.
You bought 6 properties sight unseen?
5 sight unseen.
5 of them.
Yeah, so that was actually quite interesting to sort of get comfortable with. It sort of came down to, I can get a building and pest inspection done by a professional who can sort of see everything. I can get a pretty good view on, Google Maps and look at all the sort of infrastructure. But if you just sort of look at the data and say, hey, vacancy rates are low in this area, people do want to live in this area, and the numbers work, then I'm sort of comfortable with it. And, by not sort of seeing all these properties, I can sort of be able to buy anywhere in Australia, and it doesn't take as much time. But it also means that I can make sure that I find a good price to buy it. And so, if things do go wrong, and there are things that have gone wrong when I bought property, but, there's a margin of safety there. So, if it's an extra couple of grand to fix something up that I didn't see, which I would have saw in real life, then, that's sort of all accounted for in the numbers.
Yeah, I guess that's true. When you're not putting up as much money as you would in, say, a market like Sydney, where it is very, very expensive, you probably do have a bit more of a cushion or a buffer when things do go wrong.
Yeah, that's exactly right. These are roughly $250,000 to $300,000 houses, and they're older style, so there's not really much that can go wrong.
So what is the total value at your portfolio sitting at about now?
Yeah, so the value is probably around the $2 million mark at the moment, and the debt around that is probably $1.5 million at the moment.
Which isn't bad going. That's 75% ratio. That's pretty good for 2 years of effort.
Yeah, it's been the best ROI that you can sort of have outside of the education piece. So pretty happy with the result. But, hopefully there's still more to come, and that's not the last purchase.
And we will get to that a bit later. But what's the timeline been on all those purchases? I ask because COVID-19 has obviously had a huge impact on a lot of people's livelihoods and stability in their homes this year. Have you bought any of them since COVID-19 hit?
Yeah, so I actually changed jobs at the start of this year. So because of that, I wasn't able to get any more lending. So I actually haven't bought this year at all. And, going into COVID, I was a little bit nervous because it's the sort of first crash that I'm going to. And I've obviously, got a fair bit of leverage under me. So I was nervous that, with the rent moratoriums and, potential people losing their jobs, that I'd also lose a fair bit of income. But surprisingly, because of the sort of research I did on the fundamentals of the areas that I bought in, vacancy rates in all those areas have just actually gone down significantly. So they're all sort of holding up. And, if you look at SQM data, the rent's gone up a fair bit and the vacancy's gone down a lot. So nothing this year. Which
must be a good feeling for you, to know that all that research actually worked and it helped you.
Yeah, no, it was actually awesome. So, it's nice to know that if you can do a lot of the hard work and actually, put your mind to it and actually work out, where the cycles are going for each state and how the supply and demand is shaping up in each of these suburbs, that, it actually sort of proves out when a crisis hits.
Did you have any, tenant changeovers or anyone asking for rental relief during this time?
No, I actually didn't get anyone asking. A lot of the tenants that I have, because it is in that, middle affordable bucket, typically they're on government jobs, and sort of when choosing tenants, I try and pick very stable income tenants, and, government's been holding up the whole time, so they're still paying their wage bill. So I haven't had any issues this year.
Well, that's great to hear. And, you must be just glad that you don't even really have to worry about some of those things that other people have had to deal with in 2020. It has been an unprecedented year. I hate to say that because it sounds cliche, but there's a lot of people that aren't in the kind of situation that you are at this point in time.
Oh, it's actually quite sad what's sort of happening. And, I'm also the government with all the stimulus that they've given to make sure that people's, livelihoods aren't affected in this crisis. So, it's good to see that the government got out in very early and make sure that, people can still, have shelter and food on the table, especially given the whole COVID-19 situation. But yeah, it's unfortunate that things like this happen. But, again, we're a very lucky country to have managed so well out of this pandemic. And, if you look at where relative to the rest of the world, it's a great place to be.
Definitely. And Rizul, we'll take another quick break there. But straight after that, you've obviously done quite well to date, and you did allude to the fact that there's more property purchases down the track for you. So I want to, get a bit more insight from you, what you're hoping to achieve over the next year or two, and even further into the future from property. We'll be back soon.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Hey everyone, welcome back to this episode of the Smart Property Investment Show, where I'm joined by Rizul Makkar, who has 7 properties to his name, and he's achieved all that in the space of a couple of years, it's amazing really. So Rizul, you were talking just before the break, going back a little bit further, you got a new job at the beginning of this year, so you haven't actually been able to buy anything since then. And considering the COVID downturn, it's probably for the best, and you probably aren't worried about that at all. What's next for you when it comes to actually investing in property?
Yeah, that's quite difficult. So hopefully, if I can get more lending, which is hopefully possible once these interest rate buffers go down, then if I can get more lending, then I'll, hope to buy a couple more properties, hopefully focus on the Adelaide, Perth and Brisbane markets. Again, I think they're still quite strong. Perth is it's going gangbusters. So, I'd love to buy a couple more properties over there. If not, then, I've got to start to look at sort of other avenues if I, maybe need to learn a bit more about property development or commercial property. It just comes down to what's going to be available for the lending market.
And are you still looking at that same really affordable section of the market? Like, have you changed the way that you are looking at the kind of properties that you want to be buying?
No, I think the affordable section's quite good because, more people can rent those properties, more people can afford those properties, more people can, afford to buy those properties. So there's a lot of demand for that affordable sector. It's also easier to get those properties revalued higher as a percentage because the absolute dollars isn't as high. So, for example, if I buy a $2 million house in Sydney, getting that revalued up to 2.4 million as a 20% gain in 6 to 12 months is actually quite difficult because the dollars is quite high. But if you're buying a, $500,000 property in Sydney, getting that to revalued to 600,000 might be a little bit easier. So if you sort of take the same approach, buying, affordable housing and getting a good price on the way in and making your money on the way in makes the revaluation easier. And that means that, I can sort of scale the property portfolio without investing too much capital, which is hard for a young person.
And are you looking just at houses, or do you delve into that unit market as well?
No, just houses mainly. It's just the scarcity value of units is it's just not there. So it's quite difficult. There's waterfront units that I'd love to buy. Unfortunately, I can't afford those. So just focus on that housing market.
And do you have any plans to move away from that rent-vestor into an owner-occupier investor, or are you just going to keep looking elsewhere and keep building up that equity that you've got in the background?
I think, I'm still quite young. I'm 25. I have no idea where I will be living in the future, which part of Sydney it is or where it's, if it's somewhere else in the world. So it just doesn't make sense for me to buy at the moment. And, at the end of the day, it's actually, $1 million house is the average in Sydney. It's just too sort of unaffordable. So no plans to change the rent investing strategy.
Which I think is a great attitude to have, and it's clearly working for you. So then looking ahead, what are you hoping to achieve from putting your money into bricks and mortar like property?
Yeah, I think I really enjoy it. Number one is the first thing. This whole process has been really exciting and it's fun. But number two, over time, it sort of helps you, gives you more financial options to sort of, if I ever want to take a break or an extended holiday or, change jobs, it's being a bit more financially free is the idea. And so this is sort of helping me on that journey of financial freedom and sort of just all about choice. I don't think I'm not even close to retirement or anything, so that's not on mine. It's just all about optionality and choice, which this has sort of brought.
For sure. And it sounds like you do actually love crunching the numbers with this kind of stuff. Tell us a little bit more about, how your research has influenced your buying and things like that. And then how that's just kind of helped you, I guess. Like, not a lot of people want to be looking at the numbers behind the scenes of buying houses, but it has been seen that it is a very effective way to actually, get a better deal when you are buying.
Yeah. So the numbers for me is the most important thing when you're doing investing. Part of it is, you try and get rid of the emotions, but, the numbers sort of speak for themselves. And, part of the, background of mine is in corporate finance. I'm sort of, working on larger transactions and, numbers and spreadsheets has been a big part of my life. And so, I was cranking out a lot of numbers on different opportunities when I was going through this process and sort of worked out that, hey, a lot of people in property aren't making money. And that was the sort of sad truth. I'd see, you pay down on a property over 30 years, but you look at some of the returns that, people get, and especially some of the properties that my parents are telling me to buy, the returns just never made sense. And I was thinking, hey, hang on, this whole property game, it's not as easy to make money as people think. You can't just buy anything and make money. So, I was crunching all the numbers and seeing, what performs well over time. And that sort of shaped my strategy. So, I sort of track my portfolio every month with all the cash flows, all the maintenance expenses, and sort of also just do a lot of forecasting and seeing, what my portfolio would look like if I got another property, and what my cash flow would look like if, half my tenants left me tomorrow, or if I had to fix 7 property roofs the next day. All these are sort of scenarios. So I do a lot of scenario analysis to make sure that I can sort of hold my head above water, given the amount of leverage I have, if things took a downturn. So, spreadsheets was a very, very big thing for me. And it's actually quite funny because one of my friends who's a software engineer ended up turning my spreadsheet into a web application.
Oh, wow.
Yeah, so he turned, because, I'm all about spreadsheets, and he's just like, hey, hang on, I can actually just make this visually better appealing. So I've been using that web app online to sort of track my properties and do all this scenario analysis, which is pretty cool.
I have to say that I can tell why you and Michael Johnson are friends if you both spend all day, every day working on spreadsheets.
Yeah, that's right. Neat, head deep in spreadsheets, which is,
you were talking about how spreadsheets do stop you from making those emotional purchases, and because emotions do make people make mistakes. But I know that you did say earlier that, you have made a couple of mistakes along the way. Are there any of them that you would like to share with the Smart Property Investment audience at the moment?
Yeah, I've made plenty of mistakes.
Are there any that stand out?
I would say having the experience of what I would buy now is very different to what I bought first. I think the first purchase wasn't as strong of a purchase that, I would buy now. So, making sure you have the right tenants in there. I had someone who was, if you talk to the neighbours, one of the tenants was in the Woodridge property was doing bad things, and and should have sort of paid attention and made sure, that I have a good tenant in there. So, there was a couple of issues in terms of like property damage that was there by not having the right tenant. Woodridge didn't see the same amount of growth that I thought that some of the latter purchases had. So, I've just gotten a lot better at researching, got a lot better at, tenant selection, property management, and that's sort of come down to just experience of buying more as you go through the same process. You just try and get better. So plenty of mistakes, and I'm sure there'll be plenty of mistakes that sort of come out in the future. But, with time, we can sort of remove some of these ones that we can control.
Well, we love hearing about mistakes on Smart Property Investment so that other people don't go through the same kind of things. And Rizul, you were talking a little bit earlier about, even in your Excel spreadsheet that you now have, that, you can see what happens if half your tenants vacate the premises tomorrow. What kind of financial position, just generally speaking, are you in if something like that were to occur? Because you can't even call that a mistake. That would just be, something that most people wouldn't plan for at all.
Yeah, I think, where my sort of cash flow sits, I'll actually just pull it up now. Where my sort of cash flow sits, it's, if half my tenants were to leave, I'd still be sort of basically cash flow neutral.
A great position to be in.
And the sort of reserves I've got means, I should be okay. Unless there was a Armageddon or anything, then it should be okay. So I think, keeping buffers is very important. And making sure you can keep your head above the water if anything bad were to happen, because, what can go wrong will go wrong. So, yeah.
Murphy's Law.
That's right.
Rizul, it's been so great to talk to you today. Thank you so much. I think a lot of people that are listening will hopefully get a lot from that. And keep in contact over the next 6 to 12 months. Let us know when you buy your next property, because I think it'd be great to keep following along with your journey, because by the sounds of it, it's nowhere near over, and who knows where you could end up. So thank you again, and best of luck with everything.
Thanks, Grace. Great to be on the show.
To everyone at home, if you enjoyed this show, please leave a review on whatever platform you're using to listen in, and be sure to subscribe at smartpropertyinvestment.com.au if you haven't already. And if you do have any questions for the Smart Property Investment team, myself and Phil and everyone else, please don't hesitate to reach out either on our social media channels or through editor@smartpropertyinvestment.com.au. Until next time, stay safe and well. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are you in the real estate industry? We're on the lookout for Australia's best agents, networks and property managers to enter the REB Awards 2021 with principal partner List Ready. The awards provide an invaluable opportunity to showcase your contribution to the industry, raise your profile on the national stage and celebrate your achievements with your peers. Nominations close in November. Start your nomination now at realestatebusinessawards.com.au/REB-awards.